That was good.
Thanks. Thanks. I'm excited. I can see some really good possibilities here. What uh, the way that I have it, what I'm developing next for this, what I call the next gen printing press, is have it where business owners can just upload their content directly onto their website. They don't have to learn about storage. And they just upload. Oh, I want to put this picture, attach it to this client. Well, they just opened up their website, which is now called a DApp, decentralized app,
Yep.
and you can customize that application to your business needs with literally having a hour-long conversation. AI can figure out, LLMs can just figure out what needs to be done and do all the coding.
Okay.
All right. And where are we? Where are we in this whole scheme of things? Let's do a quick review uh, on market structure. We've talked about cycles in the past. Does anyone remember what those different phases of each cycle are called? We're going to use the US 30 so that we can see it with evidence, and we've talked about it lots, and so it's going to be easy for us to recognize. What are the different phases of the market? I've got here, A, B, C, D. Let's do that. Actually, you know what? Yeah, A, B, C, D. What do we know about these trends, and what phases do they experience? What's this here? Obviously, this was 2020, February 2020. This is a big drop. What would we call that phase? This one would be just the collapse, crash, the bubble pops. But then there's another section, right, that comes up after that, and that's where the market recovers. I'm going to change the color of this here.
That wouldn't be. That's not consolidation. Or
No, that's right. That's right. This is just the recovery phase. So there's a collapse phase where everything just tanks. And then there's a recovery phase. We got to pick things back up again. We're like ants. You've ever gone and kicked an ant hill? Just look at them. They just go, and they're fixing it. And in the morning, it's back to normal. I mean, unless you hit it with a lawnmower. But you know what I mean? Like, we just pick things back up again and we recover. That's our nature. So that there is just the recovery phase. And after that, the next phase is what we call accumulation, where things just keep on getting better. Now, here, yeah, well, let's go accumulation. Then, after that, I'm going to get rid of this because we don't really need
so,
it
what
there.
would you define accumulation as?
Well,
Continuing to rebuild, or
yeah,
going beyond where you dropped from?
great question. The crash occurs right after an all-time high. And so after it goes down and then recovers, it now takes some time, but we get eventually get back above that high, and we start now building on top of that high and keep on building and keep on building. So this is what we call accumulation, because we not only have gotten to our recovered levels, or we came back where we were before the crash happened. Mark that one in the calendar. No, we won't do that again. And then we go ahead and accumulate. And then there's a consolidation period. This is where that magic occurs, where it's like no one is really happy, and they say, "Oh, Biden was an idiot, and therefore we had a terrible economy." No, you guys were in consolidation for 4 years, like you normally do after a crash, and then you have an accumulation, and then you do this thing. It's just pattern recognition. This one is the Yeah, this one here is the consolidation. So in a consolidation zone, we don't make choices. We don't try to guess what's going to happen because we don't know if this is going to end up being a crash because we just had accumulation. So we don't know if it's going to be a crash or if we're going to be keeping on going. So in this phase, the market goes stagnant. And I say I say people who trade. Market starts to go stagnant during this time. And so the interpretation is that things are terrible, but they're just forgetting that just a few years before they were at an all-time high and it was like this is the best it's ever been. So back it's kind of like it's like it was winter. It was a really nice mild winter here, and then they experienced winter after the baseline temperature had risen 20 degrees. That's the equivalent. But that's what this is, consolidation. The market doesn't know which way to send it. The bears and the bulls, they fight for a while. That's just a market phase. And this also applies to zooming in as well. We see these types of movements occur more predominantly we can recognize it when we zoom out. But that inside, when we zoom in, we see these types of patterns occur because everything is a trend. And a trend has 4 phases: the crash, recovery, accumulation, and then consolidation.
And then what? Repeat, rinse and repeat,
Rinse and repeat.
except that
Except we
It's-
haven't had a crash for a while.
it's continued to recover.
That's right.
Well, except it's not recovering, it's recovering from stagnancy, I guess you could say.
And this is where you have to bring in another dimension. Like we've been talking about market analysis from a technical perspective. In technical analysis, we don't look at price, we look at price action. When you get into where was I going with that? Oh, when you get into recognizing that this here is not technically accumulation, because in order for this to appear, for this price action to have occurred, there's another piece of math that people forget, and that is more money has been printed since 2020 than in the previous 200 years combined. So
And amazing, eh?
we also recognize that this is not true accumulation. This is the inflation of a currency. But this market structure still has an appeal within the technical analysis perspective, and you will have people say that this was the recession. Nope, that was just consolidation because you were still above the previous high. A crash or a recession brings you below previous lows. This, yes, we were going down. There's a declination, but we're still higher. That's like that whole funny thing about people complaining during this time, not realizing that they're 20% higher than they were when they thought things were awesome right before COVID. We remember market structure governs the trend, and this is only a C. This was not a recession. This wasn't the crash. But what's going on right now in the mainstream is that the language says that it was bad during Biden and Trump is making it better. That's the programming language being used to make this chart look like things are awesome.
Interesting it that from D, the drop from D, it does take it down below its previous low.
Yes, but still higher than B.
Correct, yes.
Or stays above B, right?
Well,
lingers there maybe a day.
So if you go back to 2020,
Hmm.
that drop there. Um, okay, so I guess it did take it down way below the previous high as well.
Oopsies. Yes.
So the drop at D is not as low as B, Bravo, right?
That's right.
So you look at 2021 or 20, that drop there was lower than the previous high, which was, I think you got three little red,
Oh, yes. Yeah, yeah.
1, 2, 3, yeah. So it definitely dropped way below those, way below.
Yes. Yeah. These types of crashes, typically speaking, even when we've seen them in the past, this one, I don't know. This one here is only from 2011. Yeah, that one's not really that much. But we've seen it in the past where, I mean, take a look at what happened in 1929 for crying out loud. It dropped 30%. And, oh, what do you know? That's not that big of a deal because we did 30% again, right? 38.
Yeah, it's interesting that, yeah, that's not Bitcoin.
No,
What?
that's not Bitcoin.
Yeah.
Yeah. So, in light of that, in light of recognizing that's how a market is structured, those are the 4 phases. Let us take into consideration the doom and gloom that people have been experiencing. Well, today, of course, people are more chipper because it's up 14%. But let's take a look at the market that everything is being transitioned into, right? The Genius Act and all that stuff, getting the US dollar hooked up with a stable coin that's going to be internationally traded, and CBDCs, and oh yeah, this is the greatest thing. This is where it's headed. And we have a market structure here as well. The question that I have is, do we even bother looking at the weekly chart? Because if we were to really take a look at this, we would say, oh, this is on the verge of collapse from the perspective that we've been chatting, right? This is where the technical analysis has to lay down his brain a little bit and look at the gestalt from another perspective that, okay, yes, you're right, but this is what we call the early adoption phase. And that barely have we begun. This is only 1.1 trillion dollars. Nvidia is worth 5 trillion, for crying out loud. This is nothing. Because we're only just beginning. When we have all of the financial markets coming on board, and now it's 25 trillion, 30 trillion dollars that are now into cryptos, which is where we're headed in the next couple of years. We can recognize that we don't really have to pay that much attention to that macro side of things because we're at the very start of something that's transformative. This is the next shift into this great reset, and I can't wait until we can talk about that. So, the real one, not the one on Earth. This here, we can use the ABCD to determine what phase of the market are we in. And so we're going to, and I use the crash term, and I like to use it because it's a word that people get. But if I use the word recession, that's more accurate to the name of the phase. So we have accumulation, recession, recovery, and consolidation. Those are the 4 different phases. So AB,
Hold on.
we've got, yeah.
Hold on. I've got collapse, recovery, accumulation, consolidation. What did you say just now?
Recession is the word that I would use to re-describe that. Instead of crash or collapse, I should say recession is the technical term. A collapse just references to a recession that occurs rapidly
Okay, recession. Okay. Recession, recovery, accumulation, consolidation. Is that
Yep,
correct?
that's right.
Okay. Now, does it happen in that order? I presume it does.
It can occur in different orders. Typically, though, we see consolidation occur after accumulation, and it can be lengthy. Like in the big scheme of things, when you start getting into the 15-minute charts, it occurs, but it occurs at pivot points within the movements. So that's another conversation. But yes, that is it's all patterns. It's all patterns. Okay, so there's accumulation. Here we have recession. Well, actually consolidation, really, because a recession we would have to be creating a low lower than the previous low, right? We'd have to be going below the market structure.
Yeah.
Market structure from A to B here on this daily chart. This is Bitcoin. B to C is technically consolidation. I'm going to go ahead and mark that one yellow. And then we have accumulation.
Now you've gone past C for that um, uh, consolidation.
That's right, because we have recovery. Thank you for reminding me about that.
Oh, so there's two recoveries then.
Um, well, yes,
After
no, you're right.
consolidation,
That's
there's
right.
recovery from stagnation.
That's right. This phase, I'm kind of I find myself intermixing terms, and I may be doing this incorrectly. This phase is called recovery simply because we want to get back up to the all-time highs.
Sure.
So there's that phase that occurs, and there's the beauty of that phase is that it makes the most money out of all the phases. It's wonderful if you can make money during accumulation, but by the time accumulation has occurred, most people are, you know, the latecomers are coming on board, and so that it's all risk because these people just got here, right? So the most money is made during recovery. That's where I'm headed with this.
Okay.
And where we are right now, coming into, I'm going to go with a deeper, no, actually, you know what, I'll go blue. Where we are right, where this is that recovery from the temporary recession or that consolidation zone where things were the balances were being fought basically, and then eventually the bulls were like, nah, it's on sale enough, we're ready to go, and we start to recover from those previous from recover back to those previous highs.
Sure.
So now we have the next phase, which is accumulation, where we're creating new highs now. Yay, we're creating new highs. And that's the joyous part. That's the part where everybody goes and mortgages their house because their friend Bob, you know, that was not their friend Bob, but the coworker's friend's uncle Bob made a bunch of money. And so now we got to get in on this. And that's where people get in on the accumulation phase, because down here they were being told that the market was terrible.
So that section including D, that's accumulation, or
This
was
is
it?
accumulation. Yeah, I'm gonna make this one a deep green.
Well, it would also seem to me like more of a consolidation time as well, would it not?
Yes, because it does typically come back to test those previous highs. Absolutely. This example here is coming where it's like going from D coming back down to this first B here. You're absolutely right. This retest, it is now entering consolidation simply because we're not really creating new highs or new lows during this period. But now we've gone back into recession. because we went ahead and we went below this. This here would have been on the micro trend. This is A, B, C, D.
Yep.
Right? On the micro trend. And so now, according to this micro trend, we are now coming down from all-time highs, going below previous all-time highs.
Yep.
And even testing previous lows. So this is recession.
Mm-hmm.
It's not really a crash, but it is certainly recession on that scale. Oops. No, that is not the tool. There we go. Oof. And in the larger scheme of things, that's on the short end things, we're now in recession, and that actually began from those levels at B.
It would have been a real recession if it had dropped below C,
Yes.
and a real recession if it dropped below A.
Yes. Yeah. And we might still test C, and we would be in confirmation. We would have confirmation that now we're consolidating. Right now, we're simply in a downward trend. If it bounces off on that short time frame, right? That shorter one, the A,
Yep.
B, C, D, that made that final extension. Yay, that big hurrah that we got the big D from, that there has been broken. But we still have that A there, which means between D and here, now we're in that consolidation on the larger time frame, that larger A, B, C, D. So we're now testing C on that larger time frame. So the timing in where we are right now is deep, what we call this deep in consolidation. That's the timing of where we are. And when you are deep in consolidation, meaning that you are testing C levels, you are in the category of the top 99% of traders, retail traders. And you will make more money than, like percentage-wise, you will make more money than all of the people on crypto Twitter that were losing their shirts every single time the price whiplashed. Look at those whiplashes. Look at how insignificant those whiplashes were. This is the daily chart. The guys that got whiplashed lost their shirts. One of the guys I follow, because it's funny to listen to how he talks. And the way he talks about meme coins gets me just laughing about how Canada and the dollar works. But he lost $25 million that day. Gone into the now. Of course, he's a 9-figure earner. So yeah, he lost $25 million. To him, that was like a I don't know, it was like
Bubblegum money.
Yeah, exactly. He clenched. I could sense him clenching that, but it's not going to destroy him. Like, he just woke up the next day and was like, yep, and that's how it goes sometimes. And he's back right into it. He's still making tons of money.
So what was it that made him lose that amount? Like,
He saw this ABCD and didn't zoom out. And he risked that this was C. That this was C. He risked that this was C and that this would become, and this was the extension. Technical analysis, right? This was the extension, but now that's my baseline. So he figured that he was in the perfect position because, oh yeah, no, we have this extension on D. So now this is C here. So we're happy, and he bought all in here. And he talked about it, how he was buying, because why? We were just finished making all-time highs. We're up, guys. We've got this. Zoom out. Yes, you're at all-time highs. But you have at this level here, you are still above B. You can't say that that's going to last forever. You might just retrace and come back down and test C again. And that's why we say when you're up in this area here and you see consolidation, technical analysis is don't buy. If you do anything, you sell because that's consolidation and these are all-time highs. So where we are right now is where you could in a market, given that zooming out perspective of the digital ID and everything that's going on, the transference that we saw from traditional finance into digital finance in 2020 was the practice round. And Zoom did what, 600%, something like that. Let's go look up Zoom, because Zoom is just a hilarious stock to look at now. Zoom Communications. Here's the daily chart. This is when they launched. They went public in 2019, and they went up in that year to October. Their high, 779%. They dropped below their original valuation.
Wow, eh?
To 90% of original value, and now they are, but still they haven't recovered. They have not recovered from that at all. They are now just back at the open prices, 85% from their all-time high when everybody got their digital ID hooked up to the Zoom. You know what this was? This Zoom was your data collection. Every meeting, every transcript. You think that now it's cool how you can get these transcripts from LLMs? They were running those LLMs on Zoom meetings in 2020. This is when they got all your data, and they don't care what happens to Zoom at this point. Because they didn't want the money, they wanted the data. So the next phase that we're headed into is going to do this to a lot more tech companies because everybody's signing up for the latest, greatest, flashiest thing because we got to give America the big hoorah for having NVIDIA on board. $5 trillion company. They're the ones driving the whole economy.
Pump and dump.
Yep. It's like the most disgusting meme coin rug pull you can imagine. Poor people. Oh. $5 trillion company that is worth nothing. Literally.
You're referring to NVIDIA. Yeah.
Yeah. All right, so look at how that happened, eh? Cardano bounced off of this. Yesterday, even Charles very rarely ever talks about price action on Cardano. But even yesterday, he did a live on YouTube for about 9 minutes explaining to everybody, having to remind them that the last time this happened was way back here in 2018. And he said, and we failed the industry because instead of going and while this recession was occurring, instead of going and building tools and resources that would assist people further in this wondrous pursuit of decentralized finance, where nobody has any ability to exercise authority over your property. Imagine that. What we could build with such a prospect on our hands. And instead, what did we do after this while this was crashing and everybody was panicking and angry at Cardano because they lost? Look, it was in 2018, Cardano was $1.29 for God's sake. And then it went down 98%. And they bitched and complained because they were down in Cardano. Cardano's a scam. Blah, blah, blah. That's what they said this whole time. And, you know, on a whole, this was the time to be building because look at how cheap it was to build your tools. you were doing transactions back and forth, and sometimes you were even creating side chains where you could exchange equity without there even being a transaction fee, depending on how you were running your stake pools. But most people, what did they do during this time? Through 2017, 18, 19, this is when everybody went crazy over NFTs. We got to create these little tokens and cartoon characters and put an image on this thing. And we can put an image on the address. Woo! Go crazy, people. And that's what we focused on. And that's what Charles was saying. We focused on the wrong thing during this time. We, as an ecosystem, we focused on the wrong thing. And then we built something new. We built DEXs, where you could decentralized exchanges. You could trade with each other without having to use each other's chains. Like you could just, hey, you've got Ethereum? Great, awesome. I don't, but I've got Cardano. I'll send it to you through a DEX. And that was an amazing thing that we built. And then all of a sudden, people started complaining and whining again. Why? Because, oh, well, look, Cardano, I bought Cardano when it was at 271. And look at where it went down to September 2023. What happened during this time? Well, there were people who were building. And those are the people that I was following the whole time. What are they building? Oh, look at that. They're building governance built into the chain. Oh my gosh, look what they're doing. They're making it where people can bring governance to their own treasuries, where they can issue their own currency based off of the sweat equity of we the people. That's an amazing thing. Why come nobody else wants to do this? I don't know. But where we are today is deep in consolidation on the macro level. Because A is just the weekly C. And so Charles came out because, yet again, people were complaining about how Cardano was down and they lost 80%. And it's like, well, you dollar cost average. That's why we dollar cost average, is so that you can't get burnt like that.
Yep.
Reminds me of Israelites complaining to God as they wandered around the desert. We have food and water, but oh my God, do we have to do the circles again? Oh my God, it's awful, it's awful, it's awful.
My gosh.
I'm alive.
Yeah. And it's funny too, because during this time here, what was the takeoff? What was the thing in this last recession? It was the meme coins. Everybody's going crazy over the meme coins during this time. Why? Because now, instead of just having NFTs, which are so cool, now we can just make an entire token worth nothing. Somebody please drop us some mana. Okay, here's a meme coin. Oh, yeah. What else do we have to look at? Oh, well, you know what? Let's look at silver.
Well, actually, go back to that, please, if you can. I was just going to.
Yeah.
So your C could become an A, and the D a B, and the current state could be a C if it turns around there.
That's right.
Is that correct?
Yep, you got it. We're now potentially we are forming the C.
Okay.
And from D, there is not much resistance between D and the all-time high. There's there are basically just 2 pivot points on the way up. One at $1.80, another one at about $2.30, $2.40, and then the all-time high at $3.07. So 3 more pivot points to the all-time high after we get above D. And this, just look at D. Well, how far is D? This is why I say, if you are buying now, you are buying at the you will make more money percentage wise than freaking Morad that lost 25 million. Percentage wise, you'll make more money than him, because just going back to recovery, just recovering back to these highs here, not the all-time high, just 229% from where we are now. What does that make it? Well, then hold on. Go ahead. Like if you're buying now, sell some then, but watch it, because we're probably going to come down and we're going to test that old B out. It's very likely. Whatever extension we end up coming to, it'll probably come back. It'll probably come back to here. You know, so sell a little bit. Make sure that you're not risking the whole thing. Sell a little bit and be ready for that retracement, because you know it's coming. And then when that retracement hits, you've got now buying it on sale. You can increase the size of your holdings for the next big jump, which will take us up to, you know, let's say the weekly all-time high, 636%. Oh, and you did the compound interest thing with another 25% on top of that. So now you're actually up 900%. Just getting back to recovery phase, finished off a recovery phase, and you make 600%. Where's accumulation going to take you? We have no idea. There's just a little bit more than $3 trillion in cryptos right now. NVIDIA, one company, is worth $5 trillion. When these companies come on board for the next phase of the Great Reset, where now you've got 20 different companies that pull a Zoom, you can bet your boots that it's not going to be $10 trillion coming into the markets. This is a great reset, and everything. This is your new stock market, by the way.
You know, it's funny. I'm looking at ADA right now on my chart, and some of the pivot points, like they go back to a year ago.
Mm-hmm.
I'm on the 4-hour chart at the moment, but yeah, it's crazy. You know, you could take those back even, a year and a half, just over a year ago.
You can even go back. There's a pivot point there, November 2023. There's another one here. Basically the same level. We're between the two, right? They're March 2023. In fact, before it even created its all-time high, it found some resistance right before that. Right? There's the yellow line. January 2021. This was an all-time high at one point.
Interesting.
Yeah. Yeah. All right. I wanted to cover some gold and silver here, and I got to be mindful of the time. Oh, yeah, we got lots of time. Silver pushed up all-time highs. What did it get to for all-time high? Oh, it was what I marked. 58.92 US. 80 something Canadian, wasn't it, Audrey Lynn? You were looking at the price there yesterday on your phone. Yeah, 80 something. And now would be a good time, I would say, because silver is going to rise at a much faster rate than gold. If you are interested in making more money, as in doing more than just hedging your wealth, that's what gold does. Okay, gold is not an investment in any circumstance. It is a hedge against inflation. It maintains its purchasing power no matter what. So gold is what that is. Silver, on the other hand, is incredibly undervalued. Ian, I'm so grateful that you shared that video on silver in the Next Gen Merchants. Great perspective. Then Audrey Lynn, the one that you shared too, complements that perfectly. We're in the timing of this silver run is uncanny. And I think that if you have gold, say you got more than, I would say if you have more than 2 ounces of gold, consider taking one of them and going to your local dealer and saying, hey, I got an ounce of gold. How much silver can you give me? Because silver, we're going to be seeing massive shortages on silver, and it's going to end up becoming extremely valuable.
What do you recommend for like just bars or what?
I would go with coins at this point. And the reason why is because this will be a currency that people are going to be using. The reason why is because during a financial crisis, whenever a nation goes through, hyperinflation, financial, a currency collapse, those kinds of things, which is exactly what this is because it is global now. What occurs, the average is that an ounce of silver can purchase you a month's worth of food. So one person can get a month's worth of food, sustenance, and food, so groceries, for a month. So it's incredibly valuable as a token of exchange.
For $57?
Yeah.
No, I couldn't. There's no way I could I'd buy not even a week's worth of food for $57.
Yeah, but our currency's not collapsed yet.
Oh, I see what you're saying. Okay.
Yeah. When
I
it
thought you were
gets
talking real world right now.
Oh, yeah. No. Well,
Okay.
real world in the sense that if you are in an area where the legal fiction requires, like, say, for instance, in Venezuela, they had 300,000% inflation one year, but it was like 2015 or something like that. So when there's that, that's when the metals really shine as that hedge against the collapsing currency, because they return back to their real world value, and real world even locally. Because in Venezuela, and the reason I know this is because I actually hired VAs, virtual assistants, from Venezuela, and I got to know what was going on with their nation as they were going through it. And silver, if you had silver, it was rare because most people didn't know. Most people are in the dark about having that. But if you had silver, 1 ounce of silver would get you 1 month's worth of food. And an ounce of gold could buy you an entire city lot with a house. Because that's how that works. When the currency collapses and everything is going to hell in a handbasket, as it were, the metals really shine. And so silver, being such a desperate ratio to gold, I liked the average there that they said was 15. I was taught, I could be wrong though, but the sources that I learned from said that it ranges depending on the year, but it was between 8 and 12. So I always thought that the average was 10. That's a big difference from 15. So I'm curious to see how that plays out. But there we have, silver is going to outpace gold significantly. We're going to be seeing silver and gold remain green for quite some time. And
Right now it's at a 73-1. I think it's 73 or 74.
Yep.
And they're talking 20-1.
Yep.
Which will be crazy. And if gold continues to grow in value, then that 20-1 is just going to exacerbate that growth of silver.
Yep.
Because let's say gold goes up to 10,000.
Mm-hmm.
You're talking a $2,000 silver.
Yes. That's crazy.
No, not that.
Well, today, if gold were to be at 10,000,
500. Sorry, 500.
Yeah. That's why there's that, and there's the peak, right? It's like this does become an exponential curve at some point where there's just there's not, like, it's like during the time which the German mark was at its, when it was peaking out, it was on a vertical rise, and then it just stops. Everybody just stops, stop using it, and then nobody knows what it's
Correct.
worth anymore.
Yep.
When that point hits, it's expected that gold will be at around $60,000.
Crazy.
Yeah,
Well,
which then where does
and
that
if
give
silver
us?
maintains that 20-to-1 ratio, that's going to be even, that's $3,000 silver.
That's 60x from where we are right now.
Yeah.
So yes,
You'll
I'm
have
all
to
about.
excuse me, Paul, but I have to run.
Yeah, no worries, no worries. This is a great chat.
I'll see you again at 2.
Indeed,
Okay.
great
Talk to you
stuff.
then.
You bet.
See you guys.
Bye for now. Any questions, Audrey Lynn? Comments? Is that the end of market analysis? Are there no more questions? So it would seem. This is the best time to be alive.